morning, this is Marcus Brown bringing you today's market update. This morning's headlines continue to be centred around yesterday's shock election result, as markets showed strong resilience at the close. Despite the recovery made in a number of indices after the initial shocks, uncertainty is expected in the coming months. Markets experienced varying degrees of volatility throughout yesterday's trading, with the FTSE closing 1% up at 6911.84, coupled with a sharp rise in Wall Street stocks after drastic sell-offs the night before. With expectations that Trump will implement protectionist trade policies, bond investors pushed up Treasury yields, with US long-dated Treasury yields rising to a 10-month high. Important business decisions have been put on hold in the short term, whilst the Bank of America Merrill Lynch Global Research has knocked 0.5 of a percentage point off its first and second quarter GDP outlook for 2017, with the yearly forecast altered to 1.8%. Attention has now turned to Federal Reserve Chair Janet Yellen. Before the election result came out, the chance of an interest rate hike in December stood at 80%, yet with Trump's victory, the figure fell to 50%. Despite this, investors remained geared up for an interest rate rise, with 85% of the 62% respondents stating that they expect a rate hike, according to a Reuters poll. In terms of what this result means for both the US and global economy remains to be seen, with some speculating that Trump could tear up the banking sector rulebook. Trump has consistently pledged to repeal Dodd-Frank, a set of reforms designed to address risk on Wall Street after the financial crisis. However, a shake-up of bank red tape will need full backing from US governmental checks. In terms of what the election outcome means for Britain, Trump has been tagged as Mr. Brexit and built a relationship with Nigel Farage, leading some analysts to speculate that the new president would be very open to putting the UK towards the front of the trade queue. However, on the contrary, the UK's domestic economy, in the order to maintain and build the special relationship Britain has with the US, will have to show a commitment to Brexit, with many pro-leave MPs stating there can be no rowing back on leaving the EU if Britain wishes to appease Trump. In corporate news, the FTSE 100 pharma group, Hikma Pharamceuticals, has said its group revenue for the full year is likely to grow by around 35%. Halfords' profits fell 12% despite a 6% uplift in group revenue in the first half of the year. In upcoming data, 2:30 sees US initial jobless claims released for the week ending on the 5th of November. Thank you for listening.